What's up, stock compounders? Brad here. It is that most wonderful time of the year where we get to see what smart money bought in the third quarter of 2021. I'm actually about 2 weeks late on this. 13F filings have been out for about 2 weeks now, but better late than never. Before I jump into the 13F filings, I want to give a huge thank you to everyone who supported Movember this month. You can see here I've got some compounding mustache hairs. Let me know in the comments if I should keep this going or if it just needs to go, okay? I don't yet know how I feel about it, but it is the last day of Movember. If you guys haven't had the opportunity yet to donate to our campaign Margin of Safety, this is to raise money for men's mental health and suicide prevention. So you've got one last chance today to donate to the campaign. We've crushed our target. I think it was $2,000 that we set out to raise as a team of YouTubers. Currently over 6,000. So fantastic. Thank you all for that support. So back into what smart money is buying in the third quarter. Most of these videos in the past that I've put together, I've really focused on investors that are tracked in Dataroma. Okay, these are super investors, typically that manage north of $300 million or so assets under management. What I did for this particular 13F filing season is I pulled in some other investors that aren't tracked by Dataroma, investors that probably a lot of you aren't familiar with. And this is some research I did a couple months ago trying to figure out, who are clone-worthy investors, both well-established investors like Warren Buffett, Charlie Munger, Monish Pabrai, but also who are the up-and-comers, right? Who are the emerging fund managers to keep an eye on that will end up in Dataroma in probably 5 or 10 years or so. So I've incorporated their 13F filings as well. Obviously, they have to be managing over $100 million to have 13F filings. But I don't even think all of these are in that situation. Sometimes they send letters to their investors where we can pull different new stock ideas from, where they reveal to the public what they've bought recently. That's the case with Andrew Rosenblum and Bonsai Partners, for example. Bonsai Partners is not a fund that's greater than 100 million. They don't have to file 13Fs. But we get to see every quarter Andrew Rosenblum's letter to his investors where he talks about what he's been buying in his fund, which is phenomenal. So without further ado, we've got 19 stocks here that were either bought outright or added to in the third quarter of 2021 for these great investors. So I'm going to kind of talk down the list and just say a little bit about each one. And these are just ordered by, alphabetically, by the ticker. So the first one, Amazon, Terry Smith of Fundsmith. This was unexpected. Terry Smith has talked in the past about not being interested in Amazon because the retail aspect of Amazon, the return on capital employed for the retail segment is quite poor. It's very low. Terry Smith isn't even quite sure how Amazon makes a profit running Amazon Prime when, say somebody orders something for $4 or $5 on Amazon, next day shipping, it's going to cost $15 or $20 just to ship that product. So, he says, he jokingly said he could run a business like that. But you see here, even though Terry Smith was kind of talking down Amazon, my guess here is he just places so much value on Amazon Web Services, and he's talked about this before as well, where if Amazon Web Services was spun out from Amazon, Terry Smith would be very interested in owning AWS. So it's possible that Terry Smith just, has been doing a lot of work on AWS and realizes, AWS is so good that it's even worth having to own the retail side of the business as well, just to have that exposure to AWS. All speculation, of course, but this was a surprise to see this. And then I've got a few columns here, market cap, just to give us a sense, how big is the company? It's just the number of shares outstanding times the current market price. Is it founder-led? So this is a metric I've been paying more and more attention to. And my rationale for this, if a company is founder-led, the CEO, right, the founder, just has a lot of inspiration behind what they're doing each and every day in that business. It's their baby. So there tends to be more drive when you've got a founder-led company versus a company with a hired gun CEO or something like that. And I want to iterate here, not all of these companies have the CEO as the founder, okay? Some of them, for example, Amazon, Jeff Bezos isn't the CEO, right? But he's still on the board. He still contributes to shaping the direction of Amazon. So if the founder has any role, really, on the management team or on the board, you get a Y here in this column for founder-led. And then you've got insider ownership, which, in some ways these are related to each other. If you've got a high insider ownership, you've got, as Charlie Munger would say, if you want to gauge the outcome, look at the incentives, right? And I really want an incentive structure where the management team is aligned similarly as myself as a shareholder. And a very clear way to have that alignment is if management team also owns the company, right? Owns equity in the company in a substantial quantity. So that's what I'm looking for here. And this is total insider ownership, the named executive officers and the board of directors. So you've got Amazon, Boost. Boost is a retail e-commerce player in the Nordics. Okay, so I think they're headquartered in Sweden, something like that. And I thought of ASOS when I saw Andrew Rosenblum's recent purchase of Boost, recent investment in Boost. So this isn't something I've dug into. You can see it's a small cap, so potentially compelling, potentially a large TAM, total addressable market for that company to grow into, starting pretty small. It is founder-led, but the founder CEO, I believe the founder is the CEO, and the CEO owns 1% of the shares outstanding, which if you look at this, a 1.2 billion market cap company, 1% of the shares, that's a $12 million stake in the company for the founder/CEO. I'd like to see a little bit more than that. So that gives me a little bit of pause that it's not higher than that. And, being retail fashion, it's really not my thing. It was pretty quick for me to take a pass on ASOS. So I'm probably not going to be doing too much work into this one either. Number 3 on the list, Berkshire Hathaway. I was surprised to see Liow buy into Berkshire Hathaway in the third quarter. Don't really know what to make of that. But, Liow is one of the investors I respect the most. I mean, he's probably in my top 3 of investors that I respect the most. He is managing a whole lot of capital. I think it's like 18 billion. Which is probably, I would I don't know how much Bill Miller manages, but it's near the top of this list of investors here. So, that is a headwind. That's a challenge, managing that much capital. So I'd like to pay more attention to investors that are managing perhaps less than $1 billion, even less than 500 million, because they can really go after those smaller market cap opportunities, like what Andrew Rosenblum is going after, Mark Walker, Greg Alexander, Yen Liow. You're probably not going to see Liow buying into a company less than $1 billion in market cap. It's just not going to move the needle for the fund. But that was very interesting to see Liow take that position. Coinbase, number 4. So this was quite interesting to me. And Fred Liu of Hayden Capital has a whole write-up on Coinbase. I think you just go to Hayden Capital website. You can read it. It's quite extensive. I think he did a pretty thorough write-up on Coinbase. Now, Guy Spear also talked about Coinbase in his talk with the Kolkata Value Investors Club. So I would encourage anyone who's interested in Coinbase to check that out. And of course, this write-up from Fred Liu. Market cap has dipped a little bit. I think it's like 68 billion now. But to me, this is really a pick and shovels play on crypto growing, right? And you don't have to know who the winners are going to be in the crypto space to capitalize on the growth of the entire space through an investment like Coinbase. So it's an intriguing investment idea. It's something I'm going to be doing a little bit of work on. It is founder-led. Brian Armstrong was the founder. I think this company was founded in like 2014 or something like that. Just went public, I think, this year in 2021. One of the first Web3 companies to go public. So, it was quite challenging to find this insider ownership number. This isn't just insider ownership. This is what Brian Armstrong owns in terms of equity exposure. I think through both direct share ownership and through options. So, 31%, that is very significant for a CEO founder to own 31%. Like I said, it just went public. So this could change over the next couple of years. But it's a very strong start in terms of founder ownership with Coinbase. The next one, Coupang. Yes, I talked about Coupang a while back. Someone was kind enough in the comments to do a little pronunciation for me. Coupang in Korea. Some say it's the Amazon of South Korea. Stan Druckenmiller of Duquesne Family Capital. It's a family office, family investment office that Stan Druckenmiller runs. Just took a new position in Coupang, and I think it's a quite substantial position for Stanley Druckenmiller. It is founder-led. 11% is the insider ownership. So I haven't done any work on Coupang. I'm always a little hesitant when people equate companies to a business like Amazon. Because, Amazon, Amazon is one of a kind, truly. But, could be worth looking at. For any of you who already have exposure to South Korea, you kind of understand the nuances of that market and want exposure to a business like this. I don't plan on doing any more work on Coupang, but there it is. Dropbox. Seth Klarman bought Dropbox in the third quarter. Just shy of 10 billion market cap. So technically it's a mid-cap stock. It is founder-led. Is it Andrew Huston, something like that, is the founder CEO of Dropbox. I've heard from a few of you, this is just a cash flow machine. They are just printing money over here at Dropbox. 23% insider ownership. So, I mean, anytime Seth Klarman takes a new position, again, he's probably up there with Liow in terms of investors that I respect. Warren Buffett, I think it was in 2014, basically said the three investors that he would direct his investors to if he were to hang up his hat. Liow, Seth Klarman, and a guy you're going to see down here, Greg Alexander. So always pay attention to what Klarman is doing. And I'm intrigued. I'm intrigued by Dropbox. The problem is I don't use, I guess technically I use Dropbox, but I only use it in a free capacity. I've never had a subscription to Dropbox, and I use it in a very limited way. I don't use it very often. But, my understanding of it, it's a way to share files in the cloud. That's just not something I do very often. So that's Dropbox with Klarman. Fiserv is a company I know nothing about. Jeffrey Ubben of Value Act Capital. Value Act is one of the funds I track through Dataroma. $66 billion company. Not founder-led. 2% insider ownership. And I believe it's heavily involved in the kind of loans space. The fintech loan arena. And that's really is not something that I think I'm capable of wrapping my head around. And given that it's not founder-led, it has a pretty small insider ownership. This one's an easy pass. Hilton Grand Vacations. Cliff Sosin is a guy who I'm really starting to pay attention to. He actually did a AMA session on Twitter, Ask Me Anything, like a 1-hour Q&A on Twitter. I was really bummed to miss that. But I got a lot of value going through that AMA session on Twitter, just looking at the exchanges that Cliff Sosin was having with people who were asking questions. Seems like a really solid investor. I think Hilton Grand Vacations is one of these special situations. I think there's like a merger happening with Hilton Grand Vacations. So probably a short-term special situation, which isn't really something that I'm interested in. Maybe some kind of reopening play. I don't know the details. But yeah, so this one's an easy pass for me as well. Interactive Corp, IAC. Now this one has a fairly recent write-up on Value Investors Club. It seems to be a Berkshire-like holding company where, Interactive Corp, Barry Diller, I believe, is kind of the mastermind behind Interactive Corp. Let me just look this. I think it's worthwhile just pulling this up on Value Investors Club. So we've got IAC, Interactive Corp. Of course, it's chasing my video feed around the screen here. Okay. IAC is no stranger to VIC. Before reading this write-up, we strongly recommend anyone interested in IAC familiarize themselves with the company's own material. We view Interactive Corp as akin to Berkshire, with the best way to understand it has always been to read its shareholder letters and ingest any other words written or spoken. So apparently, who is it? Barry Diller? Is that? I just want to make sure I'm getting that right. It is on my list of things to read. The Q3 letter to investors. I guess I should start with this. We'd start with Interactive Corp's June 2021 investor presentation. And I guess it looks like every quarter they put out a shareholder letter. And I guess, there's some parallels to Berkshire Hathaway's shareholder letters. So I am excited to dig into that. Interestingly enough, my last trip to Asheville My last 2 trips to Asheville, I rented a car through Turo, okay, which is, I guess, a company that's owned by IAC, the largest peer-to-peer car-sharing marketplace. It's the Airbnb for cars. And I'd say I had a pretty good experience with Turo. It was probably about half the price as if I would have rented through, these rental car companies. So I was quite pleased with that. And, I picked up my bags from baggage claim, walked out, and they just met me with the car right outside baggage claim, which was very convenient. So I have had a good experience with Turo. But, they own, it looks like a lot of different businesses. So it's kind of a conglomerate in that way. So it is a company I want to dig into a little bit. It's on my short list of companies to dig into. But it's the largest holding from Dennis Hong and Shaw Spring Partners. And Dennis Hong did a talk, I think it's available on YouTube, with good investing talks. And that's worth watching. I think it's like an hour and a half. And Dennis Hong kind of lays out some of his framework for how Shaw Spring finds investments. And I got some value out of that. So anyway, it's 12 billion market cap company, effectively founder-led, and a decent insider ownership for Interactive Corp. So one that may be worth checking out. Geldwen Holding. Okay, Andrew Brenton of Turtle Creek. So this one, Geldwen is one of the largest manufacturers of doors and windows for new residential construction and, remodels, residential remodels. So tailwinds with what's happening in the building industry right now. But, not founder-led, a very tiny insider ownership position. So this was an easy pass for me as well. Meridian Link was one of 2 positions here from Yen Liow of Araved Global. Now, I've really been enjoying learning from Yen Liow. The goal for his fund is to identify companies that compound earnings power at north of 20% per year for 20 years, okay? And if you're able to do that, if you're able to find businesses that are able to compound at that rate for 2 decades or more, those are very compelling opportunities. And that's really the only kinds of companies that he's looking at. So it's like maybe a couple hundred companies even fit into that model in the entire equity universe. And so that's what they do. They study those businesses that fit that particular mold. And one thing I picked up, Yen Liow, he did an interview with Equity Mates. It's like this Australian podcast. Awesome. I highly recommend it. He shared in that some of the companies that him and his team research, they spend 3,000 to 4,000 hours researching these companies. Okay, so here I am, really just touching on these companies, these 19 companies, as I go through what these great investors have bought in Q3. But, can you imagine spending 3,000 to 4,000 hours really wrapping your head around a business? That is 40 hours a week, basically a full-time job for 100 weeks, okay, just shy of 2 years. Someone spending 2 years full-time really understanding a business, okay? So that was quite humbling to hear, that for some of these businesses that they consider in their circle of competence, that's how much time they're spending understanding these businesses. So that gave me a certain respect for Yen and his team over at Araved Global. Meridian Link, I believe this is a company that makes software for fintech kinds of businesses. Again, it's not in my wheelhouse, so pretty easy to take a pass on this one. Matterport. This is something I kind of noticed. This one was brought public through a SPAC. I think it was last year. Pretty cool business concept. So my understanding of what Matterport does is it builds 3D visualizations for spaces. Okay, so it's really big for real estate. If you want to sell your house, but we're in the middle of this pandemic and you don't want to have people coming through, you can hire, or I think Matterport builds these devices that scan spaces and effectively allow you to tour a house from home, right? Just on your computer. So that's a pretty cool business concept. 7 billion market cap. Unfortunately, it's not founder-led, but it does have a pretty nice insider ownership exposure. So that's Matterport. Prosus. So Prosus was not on any 13F, okay, for Guy Spear. This one, Guy Spear talked about in his talk with the Kolkata Value Investors Club. He talked about it in his previous talk with CNBC. You have to be a CNBC Pro member to be able to see this. Investing with Tom did a video kind of summarizing his highlights from that CNBC Pro video. So check that out if you're interested. But Prosus is pretty intriguing to me. Monish Pabrai talked quite a bit about Naspers as a way to get exposure to Tencent, one of the tech giants in China. And, you know, Prosus is pretty compelling in terms of the discount you can get as a way to hold Tencent. So that may be worth looking into. I do own some Prosus in my own portfolio, so that's sort of a disclaimer there. I may be biased, so do your own work. But Prosus is quite intriguing to me. Founder-led, I guess you could say the founder of Prosus is the same as the founder of Naspers, Koos Becker. So Koos Becker wasn't the founder. Koos Becker was a hired gun that came to Naspers, and I think it was like 1999 or something like that. But Koos Becker was a very unique hired gun in that he didn't want a salary. He didn't want, you know, a fancy options package. He didn't even want a contract. He basically said, hey, if you guys want me to leave, just ask me to leave, and I'll leave. All he wanted was, I think it was like 3% of the upside in terms of the value that he was able to create at Naspers. Turns out that paid off very well for him. But, you know, he's not the CEO. He's on the board, and he owns like 1% of Prosus. So, founder-led, maybe strong, but he's still, you know, clearly having an influence with what Naspers and Prosus is doing. So I gave him a check for that. Next one, Redbubble. So Redbubble first came across my radar through Andrew Rosenblum, who's up here with Bonsai Partners, and Mark Walker has been adding to Redbubble. He talks about it in his latest letter to investors through Tollymore Partners. Redbubble, it's really a two-sided marketplace where artists are able to kind of sell their goods, similar to like an Etsy. But Mark Walker, I think he's been buying it around $4 Australian per share, Redbubble. And I believe we're currently lower than that. Let's see where we are now with Redbubble. And there's been some management changes with Redbubble recently. So, you know, it's something you probably want to dig into in terms of who's leading the ship, who's captaining the ship over there, and what are their credentials. But you can see 353. And with respect to the last year, I mean, it's pretty low in terms of where Redbubble's share price is right now. It's, the founder was the CEO for quite a while. I think now he's on the board, so he's not the captain of the ship, but he still seems to very much be having an influence on the direction of Redbubble. And 18%, I think the vast majority of that is what the founder owns. So that's Redbubble. And again, look a number of years back with Bonsai Partners letters. In one of those, Andrew Rosenblum lays out his investment thesis for Redbubble. And then you can also see what Mark Walker has to say about Redbubble. Sorry, guys, I'm just going to refresh my feed here so you can look at my beautiful stash. I don't want you guys to miss a moment of that. Okay, next one, Rimini Street. So Rimini Street caught my attention because it's quite a small company for Greg Alexander to have bought. Rimini Street, there's been some lawsuits going on with Rimini Street, so that definitely gives me pause. Provides enterprise software products, services, and support, for Oracle and SAP enterprise software products. So it sounds like they got sued by Oracle. They've been in and out of court with Oracle, but it sounds like they might be on the tail end of all of that stuff. So anyway, caught my attention because Greg Alexander bought in very high insider ownership stake. It is founder-led. The founder is the CEO. So for any of you who are interested in the software support services area, this could be one to look at. Next, SEMrush Holdings by Pat Dorsey. And this is just shy of a $3 billion market cap, so at the smaller end of mid cap. I just want to refresh myself on what SEMrush does. Online visibility management software as a service platform helps businesses run search engine optimization, pay-per-click content, social media, and competitive research campaigns. So there you go. Founded in 2008. So that's SEMrush. This isn't one that I'm all that interested in. It is founder-led. It's got the highest insider ownership on this list. To be honest, guys, I'm really looking for companies that are around $1 billion or less in market cap. I really like sort of this $500-600 million market cap size. So, I look at SEMrush and it's a little bit bigger than I'd like. I don't know that I'm going to be able to wrap my head around how to value a business like this. So it's kind of an easy pass for me. A lot of what Pat Dorsey has bought recently, I find it hard to wrap my head around. Even though I know he's a great investor, he's someone I've been tracking. He keeps adding to Wix, and it's hard for me to really understand what's behind that. Next one, Semler Scientific. So this is the one from Yen at Araft Global that I am particularly interested in. It's a healthcare. So they've developed a way to measure blood flow that's, I guess, pretty unique and significantly cheaper than the alternatives. This is one I know a few of you have been digging into as well. On Twitter, one of my followers just did a kind of a write-up on Semler to try to get his head around it as well. develops, manufactures, and markets proprietary products that assist healthcare providers to evaluate and treat patients with chronic diseases in the U.S. So the product I was talking about is QuantaFlo. Now, Yen actually talks about SMLR Scientific in his talk with Equity Mates podcast. I think he spends like a minute just kind of ripping through his high-level thesis for SMLR Scientific. So definitely check that out. And he basically said there's 4 different product lines that SMLR Scientific is producing, and this first one with QuantaFlo, he thinks is really just taking off. So there's not just this one upside optionality with SMLR. There's a couple others that could also be huge wins for the business. So that's great when you've got a business that can win multiple ways. That can be a very compelling opportunity. So again, this is on my short list here of companies I'm going to dig deeper into. Twitter. Stephen Mandel, Lone Pine Capital. So, of course, the big news with Twitter, I think it was yesterday. Yeah, it was yesterday. Jack Dorsey announced he's stepping down as CEO, and he's really stepping down from the company. He's leaving the company. It sounds like to focus on Square and some of his charitable work. So, big news there. For me, when I look at a company like Twitter and I look at the free cash flow yield, it's like 0.1%. The big issue I see with Twitter, obviously, it's a very valuable business. People get a lot of value out of using Twitter. I've gotten a lot of value out of using Twitter. There's many great investors on Twitter, and it's been fun to build my network there. The issue I see with Twitter is that Twitter doesn't really know how to extract value for itself very well. And I think that can be a challenging thing when people are used to something being free. I think it can be challenging to kind of flip the monetization switch on a business like Twitter without, people leaving or people just finding an alternative that's free. So we'll see, it remains to be seen how Twitter is able to do that over the next couple of years. But I think that's going to be challenging. And I'm happy to wait to see that Twitter is making some serious progress in that direction before I consider taking a position in Twitter. So this is one that's intriguing to me because I do see a ton of value in the company. From a user perspective, I just don't see a ton of value yet from a shareholder perspective. And then finally, Naked Wines. Again, this isn't one that showed up on a 13F. It's a UK-based company. But I noticed Norbert Liu added to his position in the third quarter of 2021. And Norbert Liu, he does not make many moves, okay? It is quite rare to see any changes in Norbert Liu's portfolio. So when I do see that, it gets my attention. Naked Wines, it's interesting. Elliot Turner talked about it in MOI Global, and there have been, I think, a number of investment theses on Value Investors Club. It's basically a direct-to-consumer, direct from winery to consumer type business with wines, direct shipping of wine. And it sounds like there's been a CEO change, so it's no longer founder-led. The new CEO is in Napa, which is really right in my backyard here in Northern California. But it sounds like they're really trying to move the focus of operations from the UK to California and the US, really trying to grow their market share in the US of the kind of direct-to-consumer wine sales. So here's the thing. I don't drink wine, okay? So it's hard for me to get excited about owning a business like this for the long term. It's a little exciting that it's right in my backyard, right? I like going to Napa. I do enjoy going to wineries from time to time. I was just in a winery down in Carmel over Thanksgiving, and that was a fun time. But I don't drink wine. Okay, if you gave me a $10 bottle of wine and you gave me a $500 bottle of wine, and I did a blind taste test, I wouldn't be able to tell you which was which. I have no palate for wine. I have no interest in wine. I don't really like the taste of wine. So, for those reasons, it's probably not a business for me. So that's there it is, guys. This is the whirlwind tour of what jumped out at me in terms of what great investors bought in the third quarter. Like I said, companies that I'll probably dig deeper into: Coinbase, Dropbox, Interactive Corp, no, not Rimini Street, SMLR Scientific. So those would be the four. Coinbase, Dropbox, Interactive Corp, and SMLR Scientific are the ones that I want to spend some time with. So let me know in the comments which of these are most compelling to you. If you've bought any since you saw that these great investors bought in the third quarter, or what you're planning on spending 3,000 to 4,000 hours researching. That's mostly a joke. If any of you do that, hats off to that level of commitment. Just like our boy Yen Liow over at Araft Global. Just a pretty cool story there with how seriously they take this game of investing. But anyway, guys, I will link to this spreadsheet in the description if you guys want to copy it and create your own spreadsheet, maybe expand on it, whatever you want to do. But that is all I've got for this quarter's What Smart Money is Buying. The most wonderful time of the year. Fortunately, we have 4 most wonderful times of the year. So already looking forward to the next one. All right, guys, with that, I will see you all in the next video. Take care.